So the first two things that I want to hit on before I hit on the jobs report, which is of course within the top three things this morning, is number one, the UK, and number two, China. So number one, this UK election was just a blowout versus mainstream expectations. It puts a huge smile on my face, of course, because you have the left-leaning mainstream media just trumpeting the gains that the Labour Party were making, allegedly, and then the Tories just smoke them. I mean, it's just a fantastic day of what not to do. Again, you got all these people, these political agendas. Again, I couldn't care less who wins that election, but the reality is that when you're pitching that as all this trending information and data, and you get it that wrong, then what is your source worth to you? So again, you look at the UK election and its impact on markets. It's actually the biggest day for the FTSE. Again, the UK stock market, biggest day for the FTSE on a relative basis to the rest of the European stock markets of the year. Now again, the UK has been lagging the rest of the stock markets. There's been plenty of rumors that David Cameron was going to lose, but this morning you also have a huge move in the British pound of over 1%. So both the British pound and the UK look very investable to us. They have for quite some time. The economic data, I would say, after slowing a little bit in the UK, may very well reaccelerate here again, as it has for the last 2 to 3 years. Second point, China. Again, no matter what your view is on global growth, you cannot ignore what's going on in China. China's comments and the data last night, again, the PBOC comments, People's Bank of China comments, were easily the most, wet Kleenex I've seen in quite some time. I mean, the PBOC basically said, we're not going to do a massive QE. Now, on the other side of that, they had to address the economy. The economy in China this morning, I think export growth was down 6% year over year, and imports were down 16%. So again, this Chinese economy is slowing at an accelerating rate. The Chinese are trying to create rumors about stimulus. The brokers are, people who are getting margin calls now. And at the same time, the central bank is saying, don't expect QE. So this has gone completely squirrely at this point. Again, good news in the UK, bad news in China that was met, by the way, with a rally in the Chinese stock market, which is, of course, it was down 8% in the 3 days going into this and had its 2% bounce. So those are the two things I wanted to hit on quickly. And now I want to flip it over to our USA economics analyst, Christian Drake, just to give us, I know, Christian, you're going to probably take 15 minutes to 30 minutes to analyze this jobs report in full, but just wanted to get your quick take on the numbers specifically.
Yeah, so I'll kind of go through some of the headline numbers, and then I'll have a few more minutes. We can go into some of the granular data in the Q&A. But
right.
So, I mean, headline number, total NFP, basically in line with estimates, improvement sequentially, not too much of a surprise, given last month was the lowest we've seen since December of 13. So 223 actual. I guess the call out there is we see last month was revised down to 85K from 126. Net 2-month revision of negative 39K. So 2 months ago revised up slightly. Change in private payroll is 213 versus revised 94K last month. Unemployment rate holds at ticks down to 5.4 with a small increase in the labor force participation rate. So some okay under the hood dynamics there. Change in household employment was up 192. So just, I guess, employment 101. You have the household survey and you have the establishment survey. Establishment survey gives you the headline NFP number. The household survey gives you the unemployment rate. So unemployment rate ticks down to 5.4. As a reminder there, the Fed's current view of full employment is 5.2%. Looks like they're going to have to push that down a little bit further. 62.8 on the labor force participation rate. Small tick up, but again, still at multi-decade lows there. Hourly earnings up 10 bips sequentially, up 2.2% year over year versus 2.1% last month. Weekly hours held flat at 34.5. So where the rubber meets the road on this is how much are you making per hour, how much are you working per hour, and how many people are working, right? That gives you your total aggregate income numbers. That gives you your capacity for consumption. Aggregate salary and wage income growth has been good and accelerating pretty much for the last 12 months. with the flat numbers here in terms of hours worked, earnings growth, and basically another middling NFP number, it looks like you're going to be largely flat from an income growth perspective when the April numbers come out.
And that last piece was something that a lot of people were, you had a lot of people that said, look, even if the number is not so good or it's in line, people on the non-farm payroll side, a lot of people were looking or pointing to this, this effervescent hope of average hourly earnings going up. Would you say that would be a disappointment in the number?
I guess so, but people have had that kind of Panglossian hope for the last 18 months plus, and what we've had is
Panglossian.
A whole lot of not much. So maybe a surprise against that, but it's really just more of the same, and more of the same isn't particularly surprising.
Yeah, and then on the rate of change, again, just to put this in context, the rate of change, if you take the last 2 months, that revision down to 85,000, I assume the mainstream media is not going to focus on that data point. That's a horrendous number for the prior month. So where does that kind of put you in the rate of change for the labor cycle itself, if you're thinking 3 to 6 months versus the number today in isolation?
Yeah, number today in isolation, okay. The Fed kind of speaks to whatever best suits the narrative. But if you're looking at a trending basis, so for both total non-farm payrolls and private payrolls, 3-month moving average, 6-month moving average, both moving lower, and on a year-over-year basis, on both a 1-year and 2-year basis, we're seeing slow down sequentially in the latest month.